Thanks for visiting Trading Factory. Look no further if you're sick of losing money on the stock, forex, futures, or any other market. Don't skip out on the opportunity to increase your wealth in the trading game. I'll give you an incredible strategy with 2 truly amazing indicators. I'm confident that this strategy will revolutionize your way to be a successful trader. To learn this incredible strategy, hit the play button now. If you are persistent and patient, it will help you succeed. At Trading Factory, we are dedicated to providing you with the highest quality content possible. My goal is to make complex financial information accessible and easy to understand. That's why I've put my heart and soul into my YouTube channel. So if you want to stay ahead of the game, give this video a like and don't forget to subscribe to my channel for more actionable insights and expert strategies. Without further ado, let me walk you through this strategy. First, we will add the primary indicator of this strategy, which provides us with excellent insight into what is occurring in the market. The TMA overlay indicator, developed by RDFXC, is added to the chart and its inputs are modified. Perfect, the indicator is now set. We will now disable the big SS candles and trade session. The first item that this indicator displays are 4 simple moving averages of 21, 50, 100, and 200, after which it displays triangle-shaped signals for market entry. Our goal in using this strategy will be to go with the trend rather than against it when there are 3 straight bullish or bearish candlesticks, so using this reasoning we will only make trades when the signals are in favor of the trend. Now that we've added our second indicator, which will help us refine the strategy by filtering some entries, we'll name it Neglected Volume by DGT, created by DGTRD. We can see that this indicator is not very clear, so let's change its style. Let's disable all but the relative volume histogram, and that's ideal. Now we can explain how the strategy operates. With the help of our TMA overlay indicator, we can plainly see how a trend evolves, so first we will understand it. First, we observe that the price moves sharply upward. As soon as this occurs, we observe that the 21 SMA is above the 50 SMA, which is then above the 100 SMA, and ultimately that all the SMAs are above the 200 SMA. This clearly demonstrates that all the moving averages are moving upward. Second, when the trend is ending, we see here, we can anticipate 2 possible outcomes, either that the price rests to rise again or that it stops and begins a downward trend, but in 95% of cases, the price reverses. This is evident when the 21 SMA passes below the 50 SMA. At that point, we should cancel any bullish signals that our indicators may have given us because the momentum of the trend has already been broken. Instead, we should simply wait for the price to turn around to reveal the downtrend before entering short trades. So how does the volume indicator assist us in making trades? Basically, when the conditions outlined above are met, the warning candle indicated by the triangle label should have sufficient volume, and we set our stop loss at the swing low that is closest to our take profit and our risk-reward ratio at 1:2. We can see that it was a profitable transaction, so let's look at some more examples. Here, we have 2 indications that a long trade should be entered. The SMAs are clearly showing a bullish trend, so we will enter trades when the indicator displays the green label for doing so. Here, we can see that we have signals that satisfy all the requirements, so we will place a stop-loss order at the swing low that is the closest and make a take-profit order with a risk-to-reward ratio of 2:1. As a result, we will be able to see that our trades were successful. In order to help you better grasp the approach and help you start making money, we'll look at some bearish examples. Now, we'll see some instances of short trades. It is basically the same as long trades, we just reverse the rules. So what we do first is see that the SMAs indicate a clear downtrend. So for this, first what we do is see that the 21 SMA, 50 SMA, 100 SMA are respectively one below the other, and at the same time that all the SMAs are below the 200 SMA. In this example, we have many signals from our main indicator, but only a few are legitimate because of the volume. Since we are only going to trade in the direction of the downtrend on signals with sufficient volume, only a few of the signals are valid. Therefore, we will establish a 2-to-1 risk-reward ratio for both the stop loss and take profit on these signals. Now that we've looked at some examples from another market, let's look at some more. I'm happy you're here because it shows that you're serious about becoming a professional trader. If you enjoyed this article or video, please subscribe and like it. Now that there's an obvious downtrend in play, all of the SMAs are telling us that we should only enter trades with sufficient volume. As a result, we will set the first trade stop loss and take profit levels, and it is safe to say that this was a profitable trade. Because we are in favor of the trend, we are moving to the second trade and setting the second stop loss and take profit with a risk-reward ratio of 2-to-1. As the trend comes to an end, we see one more valid signal heading our way, and we act on it. We set the stop loss and take profit levels with a risk-reward ratio of 2-to-1, and as you can see, it was also a successful trade. As you can see, this approach is very effective because we were able to get 3 winning trades in a row. Let's examine 2 more instances now. I'm giving you the required examples so you can fully comprehend the tactic. Now that we are in an uptrend, all of the SMAs are telling us that we have a lot of signals to initiate long trades, but only a small number of them are reliable because of the volume. This is crucial because the volume will guide us away from areas where the price is in the lateralization zone. As we all know, when the market is sideways, we always lose money. As a result, the volume will allow us to both escape and profit from all of those losing streaks. Okay, once we have detected the first valid trade, we are going to set the stop loss at the closest swing low and the take profit at risk-reward ratio 2-to-1. It is very important to clarify that the risk-reward ratio is greater than 1 it is, because we are in a trend, and in this way we have a greater chance of catching the continuation of the trend. As we have already seen, in previous examples and also in this trade, it was a winning trade, and now we go to the second valid trade and we are going to set the second stop loss at the closest swing low, and our take profit with risk-reward ratio of 2-to-1. We see that it was also a winning trade because we are in favor of the trend and with enough volume. Okay, so now that you know the trading setup, let's actually do our backtest on a 5-minute time frame and see if the outcomes are reasonable or not. I just finished the backtesting, and these results have surprised me. Our win rate is 70%, and the profits end up at 11%. I would also like to mention that these results will be different when trading live, so always try the strategy for yourself before using it. Guys, feel free to run back and forward testing on various markets and times to gauge how well it performs. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.